What is up, guys? What's up, Flippers? It's Marcel here. Here I am with a new forecast video for the upcoming days and week ahead. Sorry, I didn't really have time yesterday to make it happen. That's why I'm posting it today. Basically, I was working on the new course, the Art of Confirmations course, video course, during the whole weekend. And yeah, I was just so busy with it that I actually did really forget that I have to make this forecast video. But here I am today making this video for you. Basically, it's posted before the New York session open. So yeah, let's just see what can we expect on the upcoming week and upcoming days ahead. Let's just build a plan for the higher time frames and for the lower time frames too. Actually, we have a pretty nice outlook. We have a pretty nice outlook forming for today and for the upcoming days too. And I'm really excited to share this with you guys because yeah, I'm expecting some nice movements on this week. So probably we will have some nice trade opportunities. So yeah, let's just start on Euro USD. Because that will be the base of the breakdown, because GBP USD and Euro USD are correlated, right? So if EU moves up, GU moves up, EU moves down, GU moves down too. So yeah, we have a really nice scenario here on Euro USD, and let me just analyze it to you and for you. So last week, exactly at this region, I won't really break down this region because it has been already broken down several times on the previous week. So I will talk about this movement rather. So on Thursday, with the high impact news, which wasn't NFP was on Friday. This was the NFP push right here. So on Thursday, with the high impact news, price just created the third bottom right here of this liquidity. And this third bottom has been created for the extreme demand here for the 50% mitigation. So you can see that price is mitigated like 1% or like 5% maximum of this whole demand. Then it created the second bottom of the liquidity. Then it created the third bottom of the liquidity. And both of the, all of the touches created a really nice push away. So price was coming down really, really nicely and aggressively pushing away, right? So you can see that lots of orders has been pegged into the market right here with this volume candle. On the second touch, price came down with the corrective pullback, right? Mitigated it again, created the second bottom, then it aggressively pushed away again with these nice candles. Then on the third touch, it came down and just left a huge wick, which actually, let's just assume that lots of money has been placed into the market. Why? Because if price just came down, mitigated the third bottom, created the third bottom and just immediately pushed away with a nice wick and this push away, it just simply tells us that lots of money has been placed into the market right here on this line. So this is the base of the concept that we are going to use today and on this week too. That what else can we see? Just remember that here's this double bottoms. Triple bottoms. Just think about it. What can we do with it? Later, I will explain it. Here's these double taps, right? Or even triple taps. Really nice liquidity has been built up for what? For an extreme supply. We can identify an extreme supply right here. What did this supply do? This supply basically caused an order flow that has changed the 4-hour character here to the downside, right? So here was a 4-hour change of character. And this whole character changing movement was started from this extreme 4-hour region, 4-hour supply here. So this liquidity has been built up for this extreme supply. My bias is still bullish. I'm still looking for longs on the long term because the higher time frame bias is still bullish. On the daily, weekly time frames, we are still in the bull trend. So this is still a daily structure in between this low, in between this high. This is just one simple daily movement. This is just one simple daily pullback. So the thing I'm expecting here, actually, there's a really nice and high probability scenario that can happen on this week, is that price sweeps this liquidity. First of all, sweeps this liquidity into the supply. After supply mitigation, it creates a nice confirmational entry, 15-minute change of character, confirmational entry is happening. Then it will put us in a position where we can execute sales, really nice sales, into the deep region on this demand, where we will be able to wait for another confirmational entry, fractally confirmed timeframes, and we will be able to take advantage of this fractally confirmed order flow, and we will be able to take longs targeting this swing high point right here. So basically, this is the long-term higher time frame plan that we are expecting. And the reason I'm expecting this is because it's correlated with the GBP USD. Exactly, GBP USD is exactly the same people away from demand, like Euro USD is away from this demand. I will show it. But what else can happen until this movement happens? Because, this is far away. The supply mitigation is not that far away, but it's still far away. What can we do? We can simply execute longs. based on 15-minute zone mitigations confirmation, we can simply execute longs because the order flow is bullish, right? Order flow is bullish. Here in this leg, we have a bullish order flow too. So executing longs after this supply is pretty much valid and can be doable. And it's a really nice scenario to have. So we are looking for 15-minute zone mitigations somewhere around here, which has already happened, or somewhere around here, or somewhere around here. We are looking for 15-minute zone mitigations and confirmations on those areas. And if one of these areas can give us confirmation, we can execute nice longs after this supply, where we will be able to wait for the short order flow and short bearish confirmational plan, which will lead the order flow down to this demand. And after demand mitigation here, of course, we will be able to wait for the confirmation again and longs all the way up to break the swing structural high point. So basically, that's the plan on your USD. It's pretty simple, and we have a really nice liquidity for this to happen, right? So everything is moved with liquidity, and by liquidity, everything is getting moved. This liquidity is getting swept. We will have a nice reversal order flow. This liquidity is getting swept. We will have a nice pre-reversal order flow again, which will break the swing high point, and will continue the direction into the original main trend direction, which is bullish. So that's the higher time frame plan. Switching down to the lower time frame, to the 15-minute one. So here's the liquidity right below the supply area. I just marked it, pre-marked that price has mitigated the 15-minute demand at this region, and this 15-minute demand right here is pretty much valid and really, really valuable. Why? Let's just find the reason behind it. So basically the whole thing we are doing here is that, okay, this movement has been already printed, right? So I already saw this movement has been printed when I analyze the chart. So I see a reaction here. What do I do when I see a reaction? What do I do when I see price changes character on several places with an aggressive movement to the upside? I search the cause for it. I check that, was there any higher time frame zone mitigation? Did price react on something, or was it just a middle of nowhere reversal? If price reacted on something, then I'm checking the order flow, checking the trend. And if price, for example, reacted on the demand, and I mark out this demand. Okay, mark this demand out. I know that price reacted here. I'm checking the trend and order flow. Since I checked the higher time frame, then I know that the trend is still bullish. I'm checking the order flow. I can clearly see that the order flow is bullish right here. You know, the order flow has been a bit changed here, but price immediately changed it back right here to bullish. So what is the next step? I'm assuming that I'm going to take longs. I'm building a long plan, right? And of course, when I see a demand mitigation, for example, here, I see and check the strength of this demand. So I just simply place a marker here, horizontal line, place it here, see if price reacted on something with this demand. I can see that here was a really, really nice reaction on this supply. See the strength of this supply also. I can see that this supply has caused a nice change of character in the market, because price previously changed the character here to bullish on several places. And this is the supply that has caused the change back of the character into bearish. And what else can we see below this supply? We can see that, okay, there was a pretty nice and really, really huge liquidity line. Just look at this huge liquidity line right here, build up for this supply. So now I know that this demand that I've marked out here is pretty much valuable. And the reason I'm calling it valuable is because it flipped a really, really, really valuable supply. So I know that if price reacts on this demand, which has already happened, I'm going to look for the longs. I'm going to look for fractal confirmation somewhere around here. I'm going to look for those confirmation and risk criteria. If those happens, I can take longs after this supply. If the supply is getting mitigated, I can apply the 4-hour plan, right? I've built a 4-hour plan, and I can apply this plan after the zone mitigation. But in the meanwhile, I'm looking for and creating 15-minute plans that are leading to these 4-hour areas, that are leading to the 4-hour